I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is March 29th.
And this is your interest rate update, along with some really important inflation data.
Remember, this is for informational purposes only. This is not financial advice. And if you like what we're doing here, be sure to hit the subscribe button, the like, and put a comment in. If you're refinancing a house or purchasing a house, you have a loan estimate or a loan scenario, we will get back to you right away.
Yeah, we love to email and we love to talk. So do, and do both if you want.
All right. So Truflation is an independent private company that's gathering lots of data and has for several years. They are doing they're tracking inflation differently than the U.S. inflation, the U.S. reported inflation, which comes out once a month. Okay. So what I wanted to bring to the audience is this new way. It's a third party. It's private. Like I said, they analyzed 10 million data points.
I still
daily.
like 10 million. I can maybe come up with maybe a million, but 10.
Yeah.
That does seem.
So, and they update it daily. And they have been kind of ahead of the curve. They're showing what inflation looks like, but we're using a lot more data. The government uses such archaic methods of gathering the data. I mean, it makes sense. It's the U.S. government. They haven't updated a lot of the systems. They're only gathering a couple pieces, and it's very manual, very labor intensive. Well, Truflation is using credit cards, reported data. That's kind of a feed daily. So they see the cost of goods daily.
Yeah, that's interesting. I wonder how many data points the government actually uses.
I think it's only in the hundreds.
Yeah.
Yeah. But what they're showing is that inflation today, and again, if you go to truflation.com, it's just something that you can see. They're showing inflation right now is at 3.98. Now, the last inflation report for the U.S. was reported on March 14th, and it was saying that our inflation was at 6%. Truflation at that time, and this is a one-year chart, they were showing that the Truflation was about 4.5%.
So basically 1.5% lower than what the government was saying.
Yes.
Okay.
And that's right. Now today, Truflation is showing that it's right about 3.98. So about 0.5% lower. Just in over 2 weeks, they've seen inflation going down 2%. But they've also seen inflation come down, which has been pretty accurate as far as the inflation downward path pretty steadily since last May.
Yeah, that's probably as steady as it gets.
Yeah, this line right here. So it is good news for mortgage rates. And the reason why we're talking about this is mortgage rates all depend really on this inflation data, because the Fed, Jerome Powell, will be making decisions on the Fed rate based on what inflation is doing.
Yeah, remember, this is like this is like daisy chain. Mortgage rates depend on what the feds do with the Fed funds rate. The Fed funds rate depends on what inflation's doing. So inflation is the mothership here, kind of driving everything. And as soon as that gets under control, they can turn down the ratchet, and interest rates will come down on housing.
So this is good news for mortgage rates. I mean, hopefully it's a good sign. Forecast that we could see the inflation continuing to go down.
Yeah.
Wanted to show you inside of Truflation. They show what housing's been doing, because they break it up into housing, utilities, transportation, health, all the different categories. But they've seen that housing has gone down over the last 12 months, about 6.36%.
Which doesn't actually sound too bad, does it? I mean, 6%?
Yeah.
Is in this past year, when all we've talked about is stress and rising interest rates and what's going to happen to the housing market, 6%. That's actually not very bad.
Yeah. So it's overall for the country, and something we wanted to show you. And you can just kind of see it. Again, it updates frequently. I'm not sure if it's actually daily. I think it is daily, but there's just not as many data points on that one. Okay, so the 10-year yield. We bring up the 10-year yield a lot. We talk about it because the 30-year fixed mortgage that most customers are going to be getting, or whether it's a 15-year fixed, a 30, doesn't really matter.
Yeah, even if it's a 5-year mortgage.
Yeah.
They still look at what?
Yeah, the 10-year yield is what all these banks are looking at. If the 10-year yield goes up, the mortgage banks will then increase their rates. So there's a lag. the yield, if the yield, the 10-year yield goes down, the banks make those adjustments. And, as mortgage loan officers, we see that daily. The banks only adjust their rates. What do you think about maybe one, or at least, in the morning we get our updates, but by maybe once.
Yeah, I would say
twice a day.
On a slow day, one. On a really active day, it could be 6 times.
Yeah.
And when we're sweating. Because borrowers are asking me, well, what's going on? And by the time that we get back to them, we can see pricing changes coming.
So I wanted to show in the since March 13th, there have been you see these back and forth, the 10-year yield going up and down. Those are about 10% swings. That means that yield is moving up and down 10%. That is a lot of zigzagging. And so our interest rates are going up, down, almost every day. And that is it's a result of the 10-year yield doing this.
Yeah.
And here's a good example. You see here, it was about March 5th or so. All of a sudden it dropped. This is when the banking crisis, a lot of the banks were, several of those banks were having issues, like Silicon Valley.
Yeah, I think it was around March 9th or 10th.
Yeah. The 10-year started falling fast and really, accelerating. We were getting interest rate updates, every hour, new rates. And that's because of the rapid fall.
Right.
So where are interest rates today? And okay, let's, so last update a week ago, the 30-year fix, we showed it last week at 6.375. We're seeing it exactly today at 6.375 as well. The 15-year fix, we see it slightly higher at 5.75.
And this is an interesting little point. The 15 and 30 year, there is correlation, but it's not direct. Sometimes at 15, because those buyers are different for the 15 than they are for the 30. Okay, the 30-year FHA 5.99, the 30-year VA 5.99.
Those interest rates that you just saw have no points. There's no extra fees for those, and they're based off of these loan assumptions for conventional FHA and VA. It's really, really important. Had a customer today tell me, I can get that interest rate. They went to a bank, they got that interest rate, but it had points. And another borrower was saying, there's a lower rate that they were being quoted. But the point is, there were a lot of fees associated with that rate. What we're showing you is the interest rate without points.
Without points, yeah. So there's standard closing costs for every loan, but there's not extra costs. Those extra costs are also known as points.
Tom and I were mortgage brokers right here in Phoenix, Arizona. We are very competitive. As mortgage brokers, we have access to awesome rates and low fees. So if you have any scenarios for whether it's a refinance or a home purchase, be sure to email us, call us, put a question in the comments, and we'll get right back to you.
All right. Hey, thank you, folks.
Take care, everybody.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.